Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com, and today I want to show you the 41st report of this year. As usual, we're going to start off with the changes in commercials positions, and as you can see, we've got Dow Jones on top with a 26% change. So here we have the change size, and you can see it's larger than average. But we can see even larger changes in the past 1 year. Let's try to search for the one before, the last one, which was a buy signal, the change size. I think it's this one, and you can see it was a really nice signal from where prices could actually go even further higher. And this one was an even larger change size, which, as you can see, did affect prices for a short term, but couldn't really push them much higher. So that wasn't really the best signal. This one is something similar, and this one was actually an effective signal. So that's more or less about Dow Jones. Let's move on to Australian dollar, where we had a 19% change. It's a decent change size considering it's a currency, but you can see we've got some occasions when we even see larger changes in the Australian dollar. We had a large change size last week, could push prices a bit higher, so today we're witnessing an even larger change size. But let's look at the COT extreme picture and see what that shows us, because as you know, change signals are not always pointing in the same direction as an extreme. And this time you can see this change signal pointing upwards, while we can see the extreme picture a bit showing us a more bearish picture. Actually, 2 weeks ago, we had a relative extreme in the market, and it's more or less a top in this really short term. So if this continues, we're going to be witnessing prices falling a bit further. But of course, this change size could affect prices for a few days maybe. Let's move on to sugar market, where we had a 17% change. As you can see, sugar here, 17% change, not really that big of a change size. It's more or less an average size change. Let's open the 5-year chart first and see how extreme the market is. Not long ago, we witnessed a relative extreme in the market, a buy signal. You can see prices go higher from there, but this last week we had a pretty decent price decline. So if we could see prices go even further down and maybe even lower than these levels over here, we could witness an even greater extreme in the market, and that would be a good buy signal. Then let's move on to the COT extremes in large speculators and see what that shows us. We still got platinum on top. We've still got that all-time signal over there. So it's a really extreme situation we have in platinum. But you can also see and witness that prices have started to decline since last week's extreme. And you can also see that we had a really nice resistance level over here. So if someone was considering this short opportunity, that could have been and it still is a very nice risk-reward trade. I just want to show you the 10-year chart for a moment, and then we're going to move on to cotton just to show you how extreme the picture is. It's really an all-time, no question to that, a very large extreme in platinum. Cotton market, we had a 282 report extreme over there, but you can still see prices in these lower parts of the market. Let's have a look at the 10-year chart and see what that shows us. So you can see that we have commercials up over here, roughly around 20,000 contracts. That is a high boundary of commercials. They're really high, and it's an extreme that suggests prices going higher in the medium to longer term. So definitely the longer term picture is a bit more bullish than bearish. Let's move on to COT extreme and small speculators and see what that shows us. We've got 10-year notes on top with the 134 report extreme. There we go. And let's open the 10-year chart and witness that extreme over here. You can see that small speculators are usually in the short territories, but this time they're net long. So I would consider this a very decent bearish signal. Let's have a look at the Chicago wheat. We haven't talked about this the last week, but we've been analyzing it because we had this huge extreme in the market. We still have it there. I mean, we haven't moved away from those levels, so the extreme is still there. And I think that we can still consider this a bearish picture, and you just need to wait for prices to decline from there. At least that's what the commitments of traded report suggests us. That's going to be our last market, but if you would like to have a look at other charts, then you can do so at our COT charts page. If you would like to have a more detailed analysis, add other functions to your table, or just look at other COT report types like CIT, TIF, or disaggregated, or other COT data types like futures and options maybe, then come and visit us and check our subscription service here. You can do all that there. And that's going to be all for this week. So appreciate your attention. Thanks very much for being with me. I hope you enjoyed, and I hope to see you next week. Take care. Bye-bye.